right. Thank you, everyone, for attending today. It is my pleasure to welcome you to the City of Houston Housing and Community Development first session of the Spring 360 Road to Home Ownership. Like I stated before, my name is Latasha Smith. I am the Community Involvement Coordinator for the Communication and Outreach Division. As part of the Mayor's initiative to build 3,000 homes beginning this year, HCD is working to better equip community members to navigate the complicated home buying process. The 360 series will begin with the discussion of Credit 101. In this evening's discussion, we will touch bases on establishing, improving, and maintaining your credit as you prepare for home ownership. Our awesome presenter, Ms. Sherry Young, is from the Credit Coalition. Credit Coalition is one of the HUD-approved housing agencies in the Houston area. This evening, she has a lot of great information to share with you on this evening. So we want to go ahead and get started. Just a few housekeeping rules that we would like to mention. First, and you all have been doing an awesome job at this, please, all audio should remain muted throughout the presentation. At the end of the presentation, you will have an opportunity to ask your questions. You would have the opportunity to release your mute button and ask questions if you like. Second, we are requesting that you put all questions in the chat box function throughout the presentation. During the question and answer portion, we will assure that the speaker will tend to those questions at that time. Lastly, this is a recorded event. The recording and the presentation will be available to all attendees after the event. This particular presentation, the recording will be available within a week after the event. So it will take place on next week. You will receive that in an email. So please pay attention to your emails next week for that recording and the presentation. Now, I will give this over to Ms. Becky Benitez to tell us about the agenda for today.
Can you pull up the agenda, Tasha?
Okay. Sorry, we're having a few technical issues. You know, it wouldn't be an event without any technical issues. So please be patient with us.
Is there supposed to be video? I've lost all video. Not sure.
Okay, can everyone see it now?
I can.
Yes, it's working. Thank you.
Good afternoon, everyone. Our agenda for today is the introduction of our director and our outreach staff, our mini commercial for Fair Housing Hotline, the introduction of today's guests and presenters from Credit Coalition, Ms. Sherry Young, our upcoming events, and our final remarks. Thank you. Thank you.
Good evening, everyone. I would like to introduce our director. His name is Mr. Keith W. Bynum, as well as the outreach team. My name is Onika Porter. I'm the administrative manager. You guys just seen Latasha Smith. She's our community involvement coordinator. Pedro Sosa, Becky Benitez, and Dejanay Jones are our community liaisons.
The Fair Housing Act prohibits housing discrimination based on race, color, national origin, religion, sex, disability, and familiar status. If a landlord refuses to rent to you because of your service animal, the language you speak, or the color of your skin, you may have been a victim of housing discrimination. If you feel that you have been discriminated against, call the Department of Housing and Urban Development at 1-800-669-0777. Want to learn more about fair housing rights? Call the Fair Housing Hotline at 832-394-6240.
All right, so now we are up to our presenter for tonight. Like I stated earlier, Our presenter for tonight is Miss Sherry Young. She is with Credit Coalition. It is a HUD-approved housing counseling agency. Also, Miss Sherry Young is the executive director of the HUD certified house as a HUD certified housing counselor. She has been with us since we began doing the 360 Road to Home Ownership. She comes with great experience. She is also an instructor for Credit Coalition, and she will tell you more about what their organization, as well as what classes she teach for them. So once again, I want you to sit back, relax, and I hope you have a pen and a piece of paper to get all the great information you will receive for tonight. Now I will give this over to Miss Sherry Young.
Hi, Latasha. Thank you very much for having me. So speaking of gremlins in the computer systems, I'm on my laptop. So Latasha is going to be sharing the screen, and I'll be saying next as our screen changes, right, Latasha? And if the screen goes away, it's okay. I can still talk.
Okay. Well, we are about to get started. Let me do yours right now.
Well, while you're doing that, I'll introduce myself. I'm Sherry with the Credit Coalition. I am the executive director and the educator and the counselor at the Credit Coalition. We are a HUD-approved housing counseling agency, and we're one of the many area agencies in the greater Houston area that offers the financial and homebuyer education classes that meet the education requirements for the down payment assistance program for the city of Houston. If you are interested in using the City of Houston Down Payment Assistance Program, you will be using a lender that's willing to use the program. You'll have to qualify for the mortgage loan, as well as your home will have to qualify, and you'll have to qualify for the city funds, but you'll have to complete at least an 8-hour class. And this is actually 15 hours. We meet once a week for 6 consecutive weeks. But we are one of the education providers, and I'll share a link with y'all towards the end on how you can find the other agencies in and around the greater Houston area to fulfill that need. Okay, so my piece tonight, we titled it Credit Common Sense, the sense like money. And again, I'm very happy and thank y'all for allowing me to be here. So if we can go to the next slide, please. Understanding our path to credit. So first, we're going to talk about these various steps. First is step 1, get your finances in order. Number 2, know who and what you owe. Number 3, track your spending for at least 1 month. And number 4, attend a financial education class. So with that said, I want to start with just get our finances in order. For those of us that are attempting to move forward in the credit mainstream, buy a home, and that's what this is about tonight, but any type of credit transaction going forward, you need to understand who and what you owe and your credit report. You need to know where your money's going and where you would expect your money to go if you brought on a new expense. And then you follow all that up with the financial and homebuyer education classes. Can you go next, please? So I'm going to ask everybody in getting your finances in order, have you seen your special reports? If you can, put a show of hands or put something in the chat, let me know that yes, you have. And if you have seen a credit report, how did you see that report? How do you order reports? Are you using Credit Karma? Are you using some type of credit monitoring? Are you using annualcreditreport.com? We are also entitled to specialty reports, and we're going to talk about one that's very important if you're interested in the home buying process. We're going to share that one with you in just a moment. Okay, next. So the Fair and Accurate Credit Transaction Act was passed back in 2003, placed into law, and that law gave us all adults across the United States the ability to pull our Experian, TransUnion, Equifax credit reports for free once every 12 months from the main credit bureaus. Again, Experian, TransUnion, Equifax for free once every 12 months. So I know that I've seen that some of y'all are adding in how you're seeing these reports. If you're using annualcreditreport.com, or if you've used it in the past, you may think that, well, I've seen mine once because the federal law said once every 12 months. But actually, if you want to go to the next page, please. Actually, because of COVID and this economic situation we're in, they have extended that where we can go in and see Experian, TransUnion, Equifax. We can download those reports through annualcreditreport.com weekly, every week through December of this year. So last year it was supposed to end in December. The year before that it was supposed to end in April. Before that, so since COVID, they've extended this opportunity for us to view our reports once a week. And I'm not saying that everybody is going to do that, but you have the ability to download your report through annualcreditreport.com on a weekly basis. And the reason that is that was provided to us is because when COVID started, a lot of us and a lot of our creditors put us on forbearance plans or deferment plans, where if we were current when the deferment started, when we could postpone our payments for a period of time. If we were current at that time, they had to continue to report as current, even if we weren't making payments under that agreement of that deferral with that particular creditor. And so they wanted to make sure that we as consumers could view that credit report to make sure those creditors were actually reporting us correctly. Also, with this newest, I would say this newest economy we have, there's identity theft is on the rise. And so because, I mean, there's identity theft, that's why this law was passed back in 2003, because of identity theft was on the rise then. It's a lot worse now. But it gives us the ability to look at those reports to make sure that all that information is truly our report, not truly ours on our report, not somebody else's, either by mistake or by fraud. So when we get these reports, again, every week you can download annualcreditreport.com. You answer the questions. You'll pick one of the 3 bureaus, and then you'll answer a few more questions specific to that bureau, and you'll be able to then view your report. I suggest, and I tell all my classes this, don't hit print. If you hit print, you might be printing 52 pages or more. So save that file, save it to your desktop, your phone, however you save documents, save that so you can go back later and open it up and decide whether or not you want to print all those pages. Because if you're pulling them every couple of weeks, you know, again, we're entitled to see them every week, but if you're pulling each report every couple of weeks, you're going to have a lot of paper that you're going to be printing out. And pretty soon you're going to all start looking like just pieces of paper. I give this one tip. If you do happen to print your credit reports, take a highlighter, and preferably different color highlighters, and highlight the dates. So that way when your eyes see all those bunches of paper, if you print them out, you're going to be able to key in right away on, this was the one I pulled in January. This is the one I pulled in March. This is the one. So that way you're not just flipping through all these pages wondering which one goes with which. If you do happen to pull those reports, highlight the date. And that way it'll give you a better indication on which is the most recent report that you actually did pull. All right. Another report that's so important is the LexisNexis full file disclosure. Has anyone in our group tonight, have any of you ordered the LexisNexis full file? If you've attended the Fundamentals Good Credit class, that's one of our homework assignments. So I see some hands up. All right, so the LexisNexis report is so important. Again, this one is free once every 12 months. You can order the LexisNexis report online. You can call them on the phone, or you can fill out a form and mail it in. But the LexisNexis report is going to provide you public records. If there are any public records in your name, this is how you're going to see them, because the credit bureaus no longer can report public records. And the reason for that is because public records don't have all of the identifying information that the credit bureau needs to put that data on their bureau report. So now that that data cannot be sent over to the 3 credit bureaus, as consumers, we need to know, has anybody sued us and won in court? And people say, well, how would I not know? Well, if you were sued and they sent it to your last known address and you did not appear in court, you could lose by default, most likely would lose by default, and you may have a judgment or a lien against your name. And it's very important that you know if there are any out there before you start the home buying process. Because once you start the home buying process, if you're not aware of any liens or judgments, don't worry, the title company is going to pull your name. They're going to do a search for records to see if there's anything out there in your name, and so will your mortgage company or your lender. So we suggest you go ahead and get those. Look at that report, verify the information is correct. Not only does it have the liens and judgments, but it'll have your insurance records, your deed records, your address history. It could show, I think it's the driving records. There's a lot of information. If you have a license, it could show your licensing information. This LexisNexis full file, the full file report, has a lot of information. For our classes, we've had folks with as few as 15 pages, and the winner has been 362 pages. We had a person in class that her LexisNexis full file was 362 pages, lots of data. So I'm not saying that you're going to have that thick of a file, but we don't know unless we look at it. And again, that report, if there is any misinformation in any of the sections, the Bureau, that report's going to tell you what to do to dispute. You don't need to pay anyone to clean that report for you. You can do it yourself for free, just like our Experian and our TransUnion and our Equifax report. Okay, next, please. All right, so the Fair Credit Reporting Act is another way. This is the original way we all could see our credit reports for free. Now, the Fair Credit Reporting Act allows us a free Experian, TransUnion, or Equifax report if we've been denied credit, employment, or insurance over the last 60 days, and we receive a letter in the mail from that creditor or an email telling them that we have been declined and they did pull a credit report. They'll tell you which bureau report they pulled. They'll give you a phone number to call so that you can order that report. Again, another free credit report once every 12 months, or a free credit report when you're denied credit, employment, or insurance. Next. We're also entitled to a free credit report if we certify in writing that we're unemployed and we plan to look for a job within the next 60 days. I know we're not talking back and forth here, but if someone wants to put in the chat, are you currently working for an employer? Don't tell us your employer's name, but are you currently working for an employer that pulled credit when you applied for your job? And if they did pull credit, they have to get permission to do that. So when we fill out our job application, if there's a box that we select to allow background checks, the credit report could be one of those background checks that the employer could pull. Some of our employers continually pull credit reports. And again, it was something that you agreed to in order to have that job or order to apply for that job and continue with that job. But when the employers pull our credit report, they see a different version. They also don't see any other employer that may have pulled. The employment pull is actually a soft inquiry. And so no one sees that except for you and the credit bureau. So if you're worried about looking for a job and you're afraid that your employer is going to see that, unless you tell your employer you're looking for a job, they're not going to know through the credit reporting bureau because that's a soft inquiry. And by the way, soft inquiries don't affect our score. All right. We're also entitled to a free consumer credit report once per year if we receive public assistance. So if we receive housing, if we're on SNAP, if we're on Medicaid, we are entitled to another free credit report once every 12 months. Now, for this, you're going to have to put your request in writing. They will require a letter from the Public Assistance Award with your current address, and that address must match your ID. So you'll be submitting most likely a photo ID, like a driver's license or a Texas ID, along with that award letter for that public assistance. But again, another free report does not affect our credit score. And then the last big reason, if you suspect that your report is inaccurate or you are a victim of fraud or identity theft. I don't know if anybody here has been a victim of identity theft, but if you are, if you believe you might be, you don't have to know for sure, but you can file a fraud alert with one of the 3 credit bureaus. When you file that fraud alert, you'll contact one of the 3, Experian, TransUnion, or Equifax. You will let them know that you feel you've been a victim of fraud. Maybe you do or don't have a police report yet. Maybe this is in the early stages. You're receiving letters. You received a phone call. Somebody's trying to collect from you, and you know you've never had AT&T. So why are they trying to collect from you? It's not you. It could be somebody else has used your name. You are entitled to a free credit report when you file that fraud alert. That fraud alert will stay on your report 365 days. In the past years, it was 90, but now they've extended it out a full 365 days. And that fraud alert, all it's doing is warning potential creditors when a creditor is going to pull your credit file, when you give them permission to pull your credit, it's going to warn them. Or when the bad guy gives them permission, or gal gives them permission to pull your credit, it warns the creditor, warning, warning. Sherry said, reported that she may be a victim of identity theft. You really need to verify that this is really Sherry. And so again, they would take extra caution in before they would move forward with that application. At least that's what we would want. Well, with that one bureau that you contacted, now what they do is they reach out to the other 2, and they will contact the other 2 bureaus on your behalf and place a fraud alert on the other 2, again, 365 days. What'll happen is you'll receive a letter in the mail, usually within a week, a letter or a postcard. And you can hear my assistants in the background. So I want to apologize. They get kind of loud sometimes. But anyway, the bureaus will then send you a letter. The other 2 will send you a letter or one of those postcards that you have the perforated sides and you have to peel off the sides to open it up to read it. When you read it, it'll tell you you have now placed a fraud alert, 365 days. If you want a free report, please call this number. And they will, or go online, they'll give you a website to go to. I always suggest call the number and let them mail it to you. And then now it'll be another maybe 4 to 7 days once you order it to come in the mail. But my goodness, it's a wonderful thing for them to do is to go ahead and have them send those reports. Even if you've recently seen your report, get it again. Because things are constantly being reported to the credit bureaus. And when we saw it on the day and time we pulled it, there may not be that new information on it. Okay, next, please. All right, so here we go. When you order these reports through annualcreditreport.com, this is a soft inquiry. It does not affect our credit score. You will not receive a credit score when you order reports through annualcreditreport.com, no score, but you'll get what the score is made from. So if the information is messed up, then your score is going to be messed up. If the information is incorrect, doesn't matter what the number is, it's not really yours. Also understand, we'll talk about scores a little bit, but understand the score is a breathing monster, but it's a breathing thing because items are constantly being added to the credit report. Plus, there's different things that are happening to go into that score. And we'll talk about that in a little bit. Okay, but it does not affect your credit score because these are soft inquiries. Next. So what we share in our classes is that this credit report, yes, it's your report card and it documents your credit history. But I also like to say it's an image of us. When we look in the mirror, we see what we see. We see ourselves. When the creditor looks at the credit report, they're seeing you. So they're not seeing what we look like. They don't know if we wear glasses, if our hair is long, if our hair is short. They don't know anything about us personally. But what they're doing is they're building a picture of us based on the credit report. And it is so important. Those creditors, when they pull that credit report, they are using that as a tool, just as a tool, to assess your ability to repay in a timely manner. They're using that credit report along with other things, but they can use that credit report to determine risk. How risky am I? What kind of person am I based on my past payment history? Do I look like I'm going to be the kind of person that's going to pay my bills on time in the future? That's what they're looking at. They're trying to gauge risk. Next. So yes, our employers do pull for background checks. Now, and again, I'll repeat myself, when an employer pulls the credit report, they have to have permission. They just can't willy-nilly pull it. So if you are filling out an application and it asks for permission, there's a box you check to do background checks. If you decline and you don't allow the background checks, I don't know how much further your application is going to go if background checks are part of it, but they can't pull without your permission. Insurance companies also pull credit. Now, when an insurance company pulls credit, pulls our credit reports, that's also a soft inquiry, does not affect our credit score. But when we apply for our car insurance, when we renew car insurance, if we're renters and we're renting, opening a rental policy or renewing our rental policy, and then once you're shopping for homeowners insurance, that insurance company that you're going to be shopping with, they're going to pull a credit also. So just understand that all of those are soft inquiries for underwriting purposes. Those are soft inquiries. And when you order your annual creditreport.com report, you're going to see both sections of inquiries. You're going to see the soft inquiries that don't affect your score. You'll also see the hard inquiries that are affecting your score, because those are items where you've given permission when you're applying for credit. Next. So when you order these reports, if you find any misinformation on it, I'm going to say it again, and I said this earlier, you don't need to pay anybody to clean your report for you. There's a lot of companies out there that'll tell you that they will clean your credit for you or get your credit score up. There's nothing they can do for money that you can't do for yourself for free. It all starts with a credit report. If anything is incorrect, if you see an address you've never lived at, dispute it. If you see a trade line, that's a credit item, that's not yours, dispute it. If you see a name, it's either going to be labeled as a spouse or co-applicant. If you've never applied for credit with that person that's listed, with that name that's listed, dispute it. It could mean that somebody else has used your name. It also could mean that you have a common name. So Sherry Young, I didn't think that was very common until I looked at another source, Claimant Texas, and there are pages of Sherry Youngs that have money waiting for them. It's not me. The way I spell my name with an IE, I don't run into too many of those Sherrys. But again, even if you don't think you have a common name, someone else's mom might have liked the way you spelt your name, and they may have done the same thing. So if there's anything that might be inaccurate, request an investigation. Dispute it. It's easy to dispute. When you receive the paper reports in the mail, they're going to tell you to either call a phone number, go online, or fill out a form and send it back to them. It's that easy. When you're ordering it online, you're going to check a box. I mean, you just check that box. They may ask you, what is your why? I'm trying to remember exactly what it says, but you can pick not my account, wrong amount, incorrect, so you can tell them, and now the credit bureau will do an investigation. If you ordered your report through annualcreditreport.com and you initiate an investigation, you dispute, they can have up to 45 days or longer. It's usually around 45 days to run the process, to run the dispute. If you ordered your report through the fair and accurate, I'm trying to think what I'm trying to say here. If you ordered it through, if you were denied credit, employment, or insurance, the Fair Credit Reporting Act, you're denied credit through. I'm sorry, my dog is walking, looking at me. That, you know what that means? That means she's ready to go outside, and I don't want to get up and leave you guys, but I might have to in just a second. But anyway, we don't have smell vision here, right, Letitia? No smell vision?
No.
Oh, okay, good. All right. I don't smell anything yet. But if I don't let her out, we all will. All right, so back to if If you don't recognize that item and you dispute it through the Fair Credit Reporting Act, you deny credit, employment, or insurance of last 60 days, you might be a victim of fraud, you receive public assistance, or you're unemployed and you're looking for work. If you get to report those ways, then they have up to 30 days or so to run the dispute process. But in this day of electronics, these disputes usually come back really quick. And with the dispute, they are either going to verify it, where the creditor says, nope, I've got all the supporting documents, it is Sherry. Or they're going to update it, correct it. Okay, it showed I had a balance, but it's really zero. Or it's not me and it was deleted, or they don't respond and the creditor doesn't respond in a timely manner in that 30 to 45 day window. They don't respond. Well, the item falls off the report. But that doesn't mean it disappears forever. So it's going to be important that if you get that letter back and they say it deleted, did they delete it because the creditor didn't answer? Or did they delete it because it's really not yours? And you may not know. They may not tell you why it was deleted. The fact it was deleted, you still need to watch the credit report and make sure if the case that item comes back, be prepared to explain it or dispute it again. Okay, next. All right, so only inaccurate information can be disputed or removed. So again, if it is a negative item, and it's truly correct, it's truly yours, just know that it will eventually fall off the credit report. So if you go to the next one for me. So I'll just, before I go into scores, let me just add this. Negative item can stay on the credit report 7 years from the last time you were late. If it was an item that went to collections or charge-off status, it could stay on as long as 7 years and 180 days from the date it went to the charge-off status. So again, it eventually, though, it falls off. People say, well, they put it back on. The only way a creditor can put it back on your report after that 7 year period is if you decided to have a conversation with them and you renegotiated your balance and you agreed to pay something new. So I owed them $500, or they said I owed them $500. I said, I didn't know you that. And so finally, here it is, 8 years later, I get a phone call or a letter in the mail saying, Sherry, we will settle this debt with you. And I'm thinking, well, it's been more than 7 years. Okay, it's been more than 7 years, so it's not reported on the credit report. But just because it's not reported on the credit report doesn't mean I don't owe it. So I still owe the debt. So they call me, or I'm getting ready to buy a house. And I'm thinking, oh my gosh, I definitely don't want this to come up. And I'm going to go ahead and I'm going to pay. But I'm not going to pay you $500. They say, okay, look, we'll settle on $300. So the agreement is by phone. They tell me, okay, we'll take $300, Sherry. Give me a check by phone right now over $100. And in the next pay period, you can pay another $100. And the third pay period, you can have another $100 and we'll be paid in full. So I go, okay. So, all right. So I give him a check by phone. Okay. That's the first thing I should go. No, I need to see it in writing that this is what you're agreeing to. And they may say, well, we're not going to give you anything until you pay. Well, I owe you you say I owe you $500. I'm not admitting that I owe it, but you say I owe you $500. Send me the paperwork to prove I owe you this. And if you want me to settle this debt for less than the amount owed, send me that in writing too. And if they say, well, we're not. Well, what are they going to do? They can't put it back on the credit report. They can just try to collect from you in the future or sell that debt to someone else. When they sell it to someone else and it's been more than 7 years, it doesn't get put back on the credit report either, unless it's an error. So that's why you need to look at your reports. If you see any item on there that you don't recognize, dispute it. And if it is tied, I'll go back. It's tied to my Macy's. Maybe it was my Macy's account they said I owed. And that was in 2016. So that's 6 years ago. 2016. Oh, that's 7 years ago, 2016. And so I'm looking at my credit report going, okay, that was January of 2016. It shouldn't be on my report. It's been more than 7 years. So I'll dispute with the Bureau. They'll do their investigation. They'll see that account is older than 7 years, that last time I was late. and it will come off my report. Now it comes off the report. It's going to be up to me though to verify. But let's say I had 2 or 3 different collection companies along trying to collect that within those last 7 years. Each of those, while it was on my report, each of those collection agencies should show that it was the original Macy's. Again, I'm just saying Macy's. I don't know if they use collection agencies or they collect themselves, but for this instant, we're going to pretend that they use collection agencies. The original debt was Macy's, and then Macy's sold it to ABC Collections. ABC Collections on the credit report is going to show that they bought it from Macy's, the date. It's going to say Macy's. The Macy's account was sold or transferred as of a date. Now this new ABC Collections is going to start up when that was sold or transferred. Fast forward 2 more years, another collection. I don't pay ABC Collections. That's not mine. I'm not paying it. They sell it to another collection company, XYZ Collections. It'll show on the credit report that ABC Collections was transferred and sold on a certain date. And now XYZ is going to pick up Macy's debt on this particular day. So you're going to be able to look at your credit report and see the story. Started with Macy's, went to 123, went to XYZ, and eventually all of them fall off in unison. So it's going to be so important. Make sure you check your credit report. If there is any misinformation, dispute it. Okay? It doesn't cost you anything to dispute, but it will take some time. If you're planning on buying a home and you are in the process of disputing, your mortgage company, your lender is probably going to ask you wait until the dispute is finalized, then come back and continue with your application. Because while the dispute is happening, there's something going to happen with your FICO score. So let's talk about scores. There are many types of scores out there. A lot of us hear about the FICO. How many of you, anybody use Credit Karma or Credit Wise with Capital One? Or I think it's Sapphire with Chase. There's lots of different ways we can see credit scores. If you are looking at a score and you have access to a score, my assignment to you is verify which score that is, which model that is. If you're using Credit Karma, that is a Vantage model. It's not the FICO score. It's a Vantage model. I'll talk about that a little bit, but just know that credit score is derived by a statistical program. It's a number generated based on some kind of computer logarithm. And so usually the higher your score is, the better terms you have they'll present to you for borrowing. You pay less. Sometimes you pay less if you have a higher score than someone who has a lower score. So that score might be used to determine the terms that you're going to be offered to borrow that money from. So again, back to that score. That score, it helps the lender predict how likely you're going to repay that loan and make payments on time in the future. Next. Feel bad that I can't talk to you guys, that y'all aren't talking back to me. So even in our classes in Zoom, people are come in and asking questions. So I know Latasha asked me to wait for the questions to the end. So make sure if you have questions, put them in the chat so we can go through those. Okay, yes, there's many different credit scores and models available in the marketplace. And just know that different creditors may use different scoring models when evaluating your credit worthiness. So within the FICO model itself, they say there's over 52 different models. And out of those models, there are multiples between the Experian, TransUnion, and Equifax. So there are insurance scores, there's retail scores, there are mortgage scores, there's auto industry scores. So there are variations of each of those scores. So don't get married to one particular score. If you're thinking that your score is what your score is when you see a number, no, it's moving and changing. And when we see scores, the scores that we see, whether it's through my FICO or Discover offers a personal FICO version, but those are personal scores. Those aren't the scores the lenders use. they're going to use their own model, and we don't even know which version they're using. I mean, with FICO, there's a FICO 2, a FICO 4, there's the 5, there's the 7, there's the 8 that we usually see for us as consumers. There's a 9, FICO 9. There's even a 10T. The newest version is 10T, but T is in trended data. And just know that when those bureaus pull the data together, the bureaus, when they pull our credit reporting information, everything, how we pay our bills, it's the scoring model now that's put on top of that, that pulls together all that information to make the score. And every lender may have a different version. They may use FICO, but they may have a different version of the FICO. They may use an earlier version. They may use a more recent version. Problem is, we don't know which version they're using, and most likely the loan officer doesn't either. So the best thing to do is just make sure your credit report is correct, and your score will take care of itself. Okay, next. Maybe next, Latasha. Are you there? Did we lose Latasha?
No, is it, do you not
Are we
see
frozen?
it?
Yeah, it's still on. There you go. Yep. So now we're talking about what a FICO score considers. Okay.
Okay.
So our scores range, our FICO scores range from 300 to 850. And there's 5 main categories of information with a FICO. And so the first important factor is how we pay our bills. 35% of our FICO score is based on our payment history. And that's just it, 35%. 30% of our score is based on how much our actual utilization. You might have heard the term utilization. To calculate your utilization, you take your balance divided by your limit. How much of that limit are you actually using? We'll talk about a little bit what FICO likes to see for the folks that have the highest scores. Length of credit history, 15%. Hey, Bobby, Zoe was doing a dance. 15% of our FICO score model, 15% is our length of credit history. There's something new that's happening in the market now. Those buy now, pay later loans. A lot of the buy now, pay later loans are set over 4 payments, some to 6 payments. Oh, I can hear it. We're getting someone's mic is on. But with the buy now, pay later, what's happening or what could happen in the future with the FICO scoring model, that could impact our overall length of credit history. It could impact that part of the FICO score, because the more accounts we have that are those short-term accounts, the ones with those little short accounts, that's going to, on the average, that will lower or shorten our credit length of history. And then 10% is new credit. These are the people say, well, how many points is each inquiry? It depends on what's on your report. It depends on your history. It depends on your length. But most inquiries are anywhere from as few as 3 points to 5 points. That affects your score. Remember, these are only hard inquiries, not those employment, not the insurance scores, not the type of score, not the type of inquiries that creditors use when they're offering you junk mail, when they're offering you a opportunity to get into debt. That's a soft inquiry. Or when your current creditors are going in and looking at your credit report, you have an account with them. They also can do an account review. That's a soft inquiry, doesn't affect your credit score. And the last part of the FICO score is the type of credit you use. So this would be installment loans, retail accounts. Do you have national bank cards? Are you primarily short-term loans? So again, there are many different types of credit, and that is taken into account when they determine your FICO score. If you could turn next one for me, please. So I'm waiting. So they're so kind. So Latasha's kind to do this because my screen, for some reason, Teams is not operating on my desktop. As soon as I would open it, it would turn it off and unload it. So Latasha, can you go to the next one for me?
Okay. It's supposed to be Vantage Score,
There we go.
correct?
Yeah, we're there. We're there now.
I'm
Yes,
sorry,
ma'am.
it's a
Thank-
lapse in time. I'm sorry.
Okay, that's fine. Okay, so the other scoring model is the Vantage model. Vantage is actually owned by Experian, TransUnion, and Equifax. And with Vantage, you might see that you will see that if you order Credit Karma. If you're looking at the Credit Karma report, Credit Karma gives you a TransUnion and an Equifax report. And with that, they also you can pull down that Vantage scoring model. It is also 300 to 850 or so on the range, but it's different. It's mathematically scored differently. So what I explained to families that we talk to, or that I talk to, I say, look, think of the Vantage model and the FICO model like fruit. They're both fruit, but one's a pineapple and one's an apple. They both have the word apple in the name, but they're totally different. If you've ever bitten into a pineapple versus an apple, you know they're totally different. Not only do they look different, but they're definitely different. And so their taste. So that's how these scores are. The Vantage score is one version. It is a numeric model. They're going to look at things on the credit report, your history a little differently. Which score? So I'm going to ask you, I don't know if you can put it in the chat, everybody, but I'm going to watch the chat. Which score is the most important score? Which score matters? We're talking about FICO and Vantage here. Which score do you think matters? Somebody put it in the chat. I see FICO. I'm seeing lots of FICO. Yep, I'm seeing lots of FICO.
Yeah.
Well,
FICO.
I'm not, okay. I'm not going to say you're wrong, but the score that matters is the one the lender pulls. And we don't know which one the lender pulls. And so if you're married to a score, and you're thinking, that's it, I don't need to do anything else, or I don't have to worry about keeping my credit open or working on things, you might be doing yourself an injustice, because we don't know which score the lender's pulling, and we don't know the version. But the one that actually matters is the one the lender's going to use. And different lenders pull different versions. So again, it's not a cookie cutter. It's not one size fits all. So I just say, if you keep your credit report correct, you pay your bills on time, you keep your balances low, your credit scores are going to take care of themselves. Next. Okay. So number 2, we want you to know who and what you owe. In our classes, we give everyone an assignment to prepare a debt worksheet. Make a list of each credit item. This is going to be very important when you're calculating your utilization, as well as when you're preparing any type of application, any type of credit application. You're going to need this information anyway. So you list the interest rate, the name and address of the creditor. What's also important is the date the account was opened. Now, people ask me, how am I going to find that information? I usually turn it around and ask the class, how would I find the information? Many times it's not on my statement, although some credit cards will say member since. They'll give you the year. But if you could put in chat, how you would find out, or how do you know the date your account opened? If I had a prize, I'd give it to the first one who answered. So looks like somebody wants us to go back and show the step 1 slide again. You're going to get copies of these slides. Oh, you can go back if you want to, but you're going to get copies of this slide deck, so you'll have that for future reference too. Okay, but okay, there, back one more. She wants the step 1. So if you will get this step 1. I know she has to go way back. If you will get this when you get the deck. But back to, so back to, you would, I don't see it here, but you would look at your credit report. Your credit report's going to tell you when that account was opened. And that's going to be important, because you're going to need that information anyway, so that you can help yourself understand your oldest accounts. All right. We say put your last 4 digits of the account number. Don't put the whole account number on your worksheet because you don't want somebody else getting this data and then you're becoming a victim of identity theft because you provided that written down. So just something to identify the account. Contact number of that particular creditor. Again, you get that from the statement. What's your limit? So I just read an article that we're probably going to see soon, if we haven't started already, our credit limits are most likely going to start being reduced because of the way the money market is right now, or the credit market is right now. They're letting us know that if you have, even if you're in good payment with your credit card company, start to expect to see our limits to be reduced so that we can't put ourselves in more credit card debt, even if you are paying your bills on time. But what's your limit? How much do you owe? Again, base it on this particular month. What's your balance? And then you can calculate your utilization. We talked about utilization earlier. That's 30% of our FICO score. Take your balance divided by your limit. Okay. And then you're going to list your minimum payment. What is required for this particular credit item, whether if it's a car loan or installments, whatever your monthly payment is. If it's a revolving account, a credit card, we want you to list what is the minimum payment. Not what you pay, but what is the minimum payment. And then the last column is your billing date. When is this bill generated? And that's going to be important because when you fill out this form and you see all your billing dates are in the same week of the month, that means they're all due in the same week of the month. You may be able to contact your creditors, give them a call and say, hey, I need this changed out 2 weeks. I need to stagger my bills some, so I'm not totally broke in the first part of the month and then I'm full of cash the last half, or the vice versa. You can call your creditors and you can ask them, not only can you change my billing date, but can you lower my interest rate? If you see what you're paying in interest, this form is going to give you so much empowerment because now you can call that company and say, you are one of my highest credit cards. I use you. I'm a good customer. Will you please lower the interest rate too? And you're going to have to give them a number. So take your lowest, look at the lowest one and say, can you beat this? Can it be less than 7.9? And they may say, we can't go 7.9, but we can reduce it from 19.9 to 14.9. Well, that's a start. At least you got it down. And then you can call a couple months later and try again. But there's somebody, I'm going to admit this person in the waiting room. Okay, next, please. All right, step number 2, to know who and what you owe. So you know your limits. You're going to make a list of that. Know your limits. Now, according to FICO, the folks with the highest credit scores, the ones 800 is above, they use their credit. They use their credit cards, but they use them, they drink like a bird. And for many years, we've been all taught that we should never